So in my last video, I kind of pulled back the veil a little bit when it comes to some very popular dividend stocks, and we talked about why they're not a good buy right now. And that video led to some very natural and good follow-up questions, including how do I find good quality dividend stocks? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video, we are going to deep dive and do a comprehensive review on how to pick quality dividend stocks. I also want to stress before this video starts that you can absolutely find this information and research it for yourself online. There's lots of resources available, but I am going to reference the monthly dividend stock spreadsheet that I make available to members of my Patreon community. So if you're watching this video and along the way you're thinking, I would really like to have this tool, check out the link in the description below. You guys know how much I love to talk about dividend stocks and cash flow and dividend ETFs and everything in between. And I also never want to waste your time, and I want to deliver massive value with every single video I make. So without further delay, let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. All right guys, I don't want to waste your time. Let's dive right into the content here. This is the monthly dividend stock spreadsheet that I talked about in the introduction, the one that every member of my Patreon community has access to every single month at the beginning of the month that tracks all of the dividend stocks that have been paying and raising dividends consecutively, for at least 5 consecutive years. We are going to utilize this spreadsheet as the backbone for a lot of the research that I'm going to talk about in this video. So we're talking about how to buy quality dividend stocks, and that's the key word, quality. There's lots of dividend stocks out there. Some of them have been paying dividends for a little bit of time. Some of them have been paying dividends for a long time. Some of them are good value right now. Some of them are really expensive. Some of them have really unsafe dividend payouts, and others have really safe dividend payouts. How do we get through all of the different data that's available to us? I don't pretend to be the end-all be-all when it comes to dividend stock research. There could be other people out there that have other methods that lead to quality dividend portfolios. This is the specific metrics that I use to pick dividend stocks for my own portfolio. Okay, the very first thing we need to consider when it comes to picking a quality dividend stock is their dividend history, or their current dividend streak. When I talk about dividend history or dividend streak, I'm talking about how many years consecutively has a company been paying dividends. Now, we've all heard that infamous statement, right? Past performance does not guarantee future results. That being said, it's a pretty good idea of what a stock is capable of and what they've done in the past. If a company has a history of paying dividends, then cutting their dividend, then paying more dividends, then cutting their dividend, the odds of them doing that again in the future are really strong. And likewise, if we look at companies that have been paying dividends for 40, 50, 60 consecutive years, yes, they could cut their dividend in the future, and that kind of thing has happened in the past, but it's a pretty rare thing to see happen. There are different levels of dividend history. The one you're most familiar with probably is what's known as a dividend aristocrat, or the Dividend Aristocrats Index. These are all the companies that are part of the S&P 500 that have been paying their dividend consecutively and raising their dividend every single year for at least 25 consecutive years. Now you'll see in this spreadsheet, I've got a few other terms here. You see challenger, contender, and champion. Essentially, a champion is the same as a dividend aristocrat, except for the fact that it's not part of the S&P 500. So naturally, every dividend aristocrat is a dividend champion, but not every dividend champion is a dividend aristocrat. I don't have the specific title here in this spreadsheet, but we also have what are known as dividend kings. Those are members of the S&P 500 that have been paying consecutive dividends for at least 50 consecutive years. And then as you can see right here, we've got dividend contenders and we've got dividend challengers. A dividend contender is a company that has been paying dividends for at least 10 consecutive years, but less than 25. And then we've got dividend challengers right here. These are companies that have been paying dividends consecutively for at least 5 years, but less than 10. So from a dividend stability, a dividend safety standpoint, the longer a company has been paying dividends in the past, the better or more safe they are moving forward. This would make dividend aristocrats and dividend champions the safest, and dividend kings, of course. Then the next safest would be dividend contenders, and then the least safe of the group would be dividend challengers, just because they haven't been paying dividends as long as other companies. So the funny thing with dividends is they're paid out of the money that comes in from the business's profits. So for a company to pay dividends consecutively and increasing that dividend every single year for 5 years, 10 years, 15, 20, 30, 40, 50 years, that speaks to the consistency and the stability of the business. In my dividend stock spreadsheet, you can come in here and filter for yourself in Microsoft Excel, and we have it available in Google Sheets. You can come in here and you can only look at, if you want to, you can say, I don't want to look at all of them, I just want to look at dividend champions. You can come in here. And from in there, you also have the S&P 500 status right here. You can look at just the aristocrats. So for me personally, what I choose to do is I will pick up a dividend challenger if necessary. I will pick up a dividend challenger, a dividend contender, or a dividend champion as long as all of the other metrics are lined up. But I also like to diversify my holdings. I do like to have a few dividend champions or aristocrats in the portfolio if I can make it work. And I've got other metrics that line up well. Now, can you invest in companies that have only been paying dividends for 2 years or 3 years? Absolutely. Does that mean that you're going to be confident that that dividend is going to continue in the future or not be cut? Hard to say. All right, the second metric we're gonna look at here on this spreadsheet is dividend yield. Now this one is probably the one you're most aware of even as a new investor. Dividend yield. What is dividend yield? How is it calculated? Dividend yield serves as a function to understand how expensive a stock is relative to their dividend. So if you come in here, we see our dividend yield here in column H. These are percentages here, so 3%, 2.97, 7%, so on and so forth. This number right here, the dividend yield, is a function of both the annual dividend right here and the price. Let me show you with the calculator. Let's take a look right here at 3M Company, ticker symbol MMM. Let's pull this over here. We've got a price here of $197.43, and we have an annual dividend over here, $5.92 a share. So we take $5.92 and we divide it by the price, $197.43. That gives you your dividend yield, 2.9985%, which is rounded up to 3%. A company with a larger dividend yield is less expensive to buy and you get more dividend considering how much money you have to invest in that stock. Companies with a really low dividend yield, you can see here down here with 1%, 1.4, 1.5, the dividends are more expensive, 72 cents per share, but it costs $70 to get that 72 cents per share. Now, are companies with low dividend yields bad companies? Absolutely not. Are they really dividend companies or companies that are a good fit for most dividend portfolios? In my opinion, no. But then again, everybody is a little bit of a different dividend investor. For me, I'm really focused on cash flow because I've got cash flow needs in the next 2 to 4 years. Other people have really long-term investing goals and they don't need the cash flow right now, and they might take a lower yielding company with higher dividend growth rates. We'll talk about that in a second. Now, what do I personally choose for my portfolio? Like I said, I have really specific cash flow needs here in the next 2 to 4 years. And as a result, the dividend yield that I want to have in my portfolio is a little bit higher than I think most people are looking for. That being said, everybody's a little bit different here, and we're going to talk about dividend safety here really soon. For me personally, I choose to have a dividend yield that's at least, at a minimum, 3%, though I'm really targeting dividend yields of at least 4 to 5%. You can also see in this column here, we have our average 5-year dividend yield, so you can see how much a dividend yield is currently for a company, as well as where have they been historically to understand how that yield is currently relating to that 5-year average. All right, the third metric that I really look at that I think is really important in a quality dividend stock portfolio is the dividend growth rate. You can see it right here on this dividend stock spreadsheet. We've got the 1-year growth rate, 3-year growth rate, and 5-year growth rate. And when I say dividend growth rate, let's be very specific here. I'm talking about how much a company grows or increases their dividend year over year. So if we look here at the 1-year dividend growth rate, you can see here that these companies here raised their dividend by 1.1% over the previous year. We've got a range from as low as 0.8, 0.37% to much, much higher here. If I sort largest to smallest, you can see some of them are as high as 78%. Now this metric alone doesn't constitute a great dividend stock. That's why we look at multiple metrics to come together for the stocks that are quality dividend stocks. But it's a very important metric to consider, especially if we look at the 3 and the 5-year growth rates. These growth rates here, by the way, are compound annual growth rates, also known as CAGR, C-A-G-R. What it measures here, for example, the 3 and the 5 years, it takes the beginning value in year 1 and the ending value in year 5, and it calculates an average growth rate based on the 5 years and the starting and ending points. So that leads to a very natural follow-up question. What is a good dividend growth rate? For me personally, again, everybody has their own metrics. I'm just sharing with you and being transparent with what my metrics are. I want a quality dividend stock, to me, is a company that raises their dividend every single year by at least exceeding the annual or long-term inflation rate, which is around 2 to 3% give or take. It fluctuates slower some years, higher than others, which means I want to see at least a 3% growth rate on the dividend stocks in my portfolio. Now, as I get closer to my big cash flow needs, which if you're new to the channel, welcome first off, but you probably don't know, I'm going on a long 1-year road trip in an RV with my family, my wife and my 4 kids in 2024, starting around June or July. And so that's going to be really what I use my dividend stock portfolio for, to cover as many expenses as possible. As I get closer to the start of our trip, I may start loading up with higher yielding stocks just to front load a little bit and get more yield out of it, and I might sacrifice a little bit of growth in the short term, but long term, I firmly believe that dividend growth rates are really where the magic happens. Being able to buy a stock and know that even if you don't buy any more of that company, more shares, that dividend should go up, and the income coming to me every year should go up every single year. So you can see here, we've got quite a range on the 1, 3, and 5 year. If you look at the top 3-year growth rates in this list, we've got as high as 58%. Top 5-year growth rates, we've got as high as 75%. I personally want the 1, 3, and the 5-year growth rates to be at least 3% or higher. Otherwise, inflation is eating up the growth in my dividend, and that's not okay with me. Fourth metric we're gonna consider here is the dividend payout ratio. It's time to start talking about safety and stability of our dividend. Now, the primary metric I like to use, and this is where you're gonna see some differing opinions, is I like to look at the payout ratio, but not the standard payout ratio. The standard payout ratio is the dividends paid divided by net income for the company. It's not a bad metric, I just don't think it's the best metric. The truth is, dividends are paid with, wait for it, cash, not net income. Net income is a number that was derived by accountants. For me, I think a better metric is cash flow, which is the actual measure of cash coming into the company. So specifically, we're talking about free cash flow, which is the cash flow left over after you've paid all of your required expenses and invested back into equipment for the company. The specific payout ratio would be dividends paid divided by free cash flow for the company. And thankfully enough, if we scroll over here on the spreadsheet, you can see that this metric is included here. We've got the actual free cash flow per share for the most recent trailing 12 months. We have the annual dividend, and we actually have the payout ratio based on free cash flow. And I've also included the payout ratio based on net income as well, so you can see that in relation. Doesn't mean it's a bad metric, and that's why I included them both, because it's helpful to see both of them. Some companies might have a really high payout ratio based on net income, but their payout ratio based on the actual cash flow is acceptable. In my spreadsheet, I already color code things to show that anything that is a negative free cash flow, meaning they don't have any free cash flow, or that exceeds 100% is in red, and anything that is below 75% is green. There's a range here between 75 and 85% where I'm willing to accept it, as long as it's a company that has a long and established track record of paying dividends and being safe. I also include real estate investment trusts and master limited partnerships that are below 85%, because these companies, based on tax laws, are required to pay out a significant amount of their cash flow, or a significant amount of their net income as well. So if you were using this spreadsheet, which again is available in the Patreon community, link in the description below, you can come in here and you can filter by this. You can just say, I only want to look at dividend payout ratios that are acceptable, which are in green. And you filter out all of the crap. As you can see here, if we filter here by all of the crappy stuff, we say smallest to largest, there are a lot of companies here with unacceptable payout ratios, in my humble opinion. These are warning signs to me that say these companies don't have stability with their dividend. Like I said, you can do your own research, guys. You don't need the spreadsheet. You don't need me to tell you what good quality dividend stocks are. That being said, I do take out a little bit of the legwork by having this monthly dividend stock spreadsheet. You can come in here and you can say, I only want to look at companies that have a 1-year growth rate that's green, a 3-year growth rate that's green, a 5-year growth rate that's green. I also only want to look at dividend stocks that are above, let's say 2.5%. That's going to be your number here, 2.50%. You can also say, I only want to look at dividend stocks that are contenders and champions. I don't want to look at challengers. Okay, got that there. We can also look at payout ratios that are green. And you can filter down to a list of quality dividend stocks that meet your criteria. Is this a perfect strategy? No. Every once in a while, the markets are going to throw you a curveball. Now, I've been blessed to not have any dividend cuts in my portfolio since I started dividend investing, and I know that a lot of people can't say that. But I'm not gonna pretend that I'm never gonna have a dividend cut, though that is my goal. All we can do is take as much precaution as possible to only put quality dividend stocks in our portfolio. And if a stock stops meeting our dividend criteria, then we kick it out and we put in a new one. Now, one other optional metric you can utilize here is what's known as the PE ratio, which I briefly talked about in the previous video about when we talked about certain dividend stocks being overpriced. I'm of the opinion that if dividend stocks meet all of my criteria, I'm not really too concerned about PE ratio, though I might use that as a way to pick only one stock if I've got 2 or 3 that I'm interested in. If I've got a dividend stock that's got a PE ratio that's lower than its historical average and another one that's a little bit higher than its historical average, then I'm gonna choose the one with the lower PE ratio because that likely means I'm capturing some appreciation in the overall stock as well over time. Hopefully you found some value out of this video, guys. Make sure to leave your 2 cents in the comments below. Let me know what your thoughts are, what metrics you think I should consider that I didn't include, which ones you think are not good measures of quality dividend stocks. I'm interested in your feedback. I'm always open to feedback from the average Joe investor community. In the very next video, we're gonna put this into practice. We're gonna apply what we learned. In the next video, I'm gonna talk about the top dividend stocks to buy right now here in late August 2021, which of course meet all of my dividend stock criteria. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.